Unlike most of the U.S. apartment market, Los Angeles has not yet seen fundamentals reach a full recovery, and yet, like most of the U.S. apartment market, LA is seeing a big surge in apartment construction. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Los Angeles update. The big headline coming out of the Los Angeles apartment market right now is the same one we're talking about a lot nationally: new apartment development, and there is a lot of it. Take a look at this chart showing construction activity by quarter. You can see it's ramping up quickly. At the end of Q1, there were 12,232 units underway, highest level in nearly 5 years, and not far off from LA's decade peak of nearly 4,000 units seen in Q1 of '08. And what makes this particularly interesting is that so much of this development is the high-end luxury variety located in the metro's priciest submarkets. Here's a list of the most active submarkets for new development. In town LA, 2,388 units being built. Mid-Wilshire with 1,331 units, and around 1,000 to 1,200 units in Santa Monica, Marina del Rey, Palms, Mar Vista, Woodland Hills, and Hollywood. And all of these submarkets have average monthly rents topping the metro norm. So construction is up, and here's the good news, job growth is also up. According to data from the Bureau of Labor Statistics, LA gained 89,400 jobs in the past year. That was the metro's largest gain in more than a decade. However, a couple of cautions here. LA still has a ton of ground to make up to get back to the employment levels it had prior to the downturn. On net, LA is still down about 200,000 jobs. And secondly, so much of the job growth lately has been concentrated in lower paying jobs in restaurants, administrative support, trade, etc. And with those underlying economic issues, plus the increased construction, it's tough to raise rents much at all. Rents up 2.6% year over year as of Q1. That matches the U.S. norm, and that's down from what we had seen in the second half of 2011 and the first half of 2012, when rents were climbing around 4% annually. So just when we thought LA was really showing some momentum, it drops off, and that's particularly discouraging here because, as we mentioned at the top of this episode, LA is a market where rents haven't yet recovered back to pre-recession levels, and so there's still some room to make up, and the pace of getting there has slowed down. Now, the other problem is that despite the job growth, apartment demand has really fluctuated. Quarterly demand has flipped from positive to negative territory over each of the past 7 quarters, so you can see what that's done for occupancy. It's been shuffling back and forth from the low 96s to mid 96s, currently at 96.3 as of Q1, down 20 basis points year over year. Now, all that said, you still have a handful of submarkets posting some good numbers. Here we'll show you the top 6 submarkets for year-over-year rent growth, all with hikes of at least 3.8%, and all with occupancy of 96% or better. And these are all generally upper-tier areas with the exception of Long Beach. And the top 2, Palms, Mar Vista, and Hollywood, they were also on the list for the most active construction areas, so those 2 have held strong despite the increased development. Both had hikes of around 6% in the past year. And then we also have South Bay, Burbank, Glendale, Pasadena, and the Brentwood, Westwood, Beverly Hills area, all with hikes of around 4%. So what will this mean for LA over the next year? We're expecting more of the same. We may continue to see some unsteadiness in demand, but we think over the course of the next year, demand will add up to keep pace with new supply, and that will keep occupancy pretty steady, and we're forecasting rents to climb 3.3% over the next year. And that wraps us up for LA. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.